Q3FY23 earnings conference call of Bharat Electronics Limited, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities. Thank you, and over to you, Mr. Kapadia.
Thank you, Michelle. Good morning, everyone. On behalf of Elara Securities, we welcome you all for the Q3FY23 and 9-month FY23 earnings conference call of Bharat Electronics Limited. I take this opportunity to welcome the management of Bharat Electronics, represented by Shri Bhanu Prakash Srivastava, Chairman and Managing Director, Shri Damodar Bhattad, Director Finance and CFO, and Mr. Srinivas S., Company Secretary, along with their team. We will begin the call with a brief overview by the management, followed by a Q&A session. I'll now hand over the call to Mr. Srivastava, sir, for his opening remarks. Over to you, sir.
Good morning to all of you. On behalf of Bharat Electronics, I welcome all investors on this conference. Brief highlights of Bharat Electronics for Q3 performance is that our turnover has increased to rupees 11,005 crore up to Q3 22-23 as compared to rupees 8,842 crores corresponding years last year, with a growth of 24.46%. Profit before tax increased to rupees 2,203 crores as compared to rupees 1,631 of corresponding Q3 figure up to Q3 last year, with a growth of 35.07%. PAT increased to rupees 16,141 crores up to Q3 as compared to rupees 1,207 crore up to Q3 last year, with a growth of 35.97%. EBITDA has increased to 20.20% up to Q3 as compared to 19.69% of corresponding figure last year. And EPS has increased to rupees 2.25 up to Q3 as compared to rupees 1.65 corresponding figure last year. Our order book position stands at rupees 50,116 crore as on 1st January 23. So these are in brief major achievements up to Q3. Over to you. Hello?
Yes, sir. Shall we open? Yes, sir, you're audible. Sir, shall we open the floor for the Q&A?
You can open the floor, yeah.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah, hi sir, good morning. Thanks for your time. I had a couple of questions. So one, starting with the order inflows, and we've clearly seen very weak orders for the last 3 quarters. Typically, at least base orders also do come to about 2,500 crores, but clearly this year, even those haven't fructified. So if you could help us, A, why have orders been so weak, and B, what's your guidance on orders for both 23 and 24?
Yeah, this is Bhanu Srivastava. See, normally defense order book, it's lumped in Q4 because the process it goes through, it is a lengthy process. Yeah. So around 3,600 crore order was booked up to Q3. When we see the breakup, around 12,000 crore worth order where PNC is already concluded by our customers and they are under various stages of processing. and another around 3,500 where we have already submitted the bid and these are processed. So if you see that sum together, what guidance we were given that end of the financial year, close to 20,000 crores. So we are working on that, and we are confident that we will be reaching close to that our guidance of around 20,000 crores. It's an iterative process where it goes through various levels, and especially if the value of the order is bigger. So we are working on that, and that is how that most of the defense procurement side goes through.
Okay, so you're still retaining that 20,000 crore number can be achieved?
Close to that, it should happen. We are working on that.
Okay, and for 24 also, you would expect a similar number, because I believe the QR-SAM has progressed well, right? So even that can be a big one.
QR-SAM has progressed well. Trials have been completed, and we expect QR-SAM to fructify maybe next financial year.
Okay, so one package there and then the second package in FY25, right? Like, I believe get broken out, so, okay.
Yes.
Okay.
Yes.
Okay. And so second would be, on the working capital, looking at your interest cost this quarter, it seems to have gone up. So if you could help me with the absolute numbers of debtor, inventory and payables, and also the cash balance if possible as of December.
I'll just tell you the working capital position. So the inventory is around 6,500 crores.
Okay.
Receivables are around 7,500 crores.
Okay.
And cash and bank balance is around 3,000 crores.
Okay, so there's some uptick on the debtor side, right?
Working capital ratio is, current ratio is of course around 1.5. As far as working capital is concerned, receivables are concerned, there's no constraints on the government side on the budget front. So we expect the receivables to be converted to cash in the fourth quarter, most of the receivables. Of course, the fourth quarter receivables will not get converted because of the time frame.
Sure.
But otherwise, receivables should get converted to cash by this quarter.
Okay. And just one last one before I hand it back. So we've seen quite a few changes in the top management over the last few quarters, on the KMP side. So if you could just help me, I'm assuming the new KMPs are here for some time to come. So if you could just help me the remaining tenure. So for example, both for the MD, the CFO, the Director of Marketing Ops, just some sense on, can we expect some stability there for the remaining tenure of the KMPs in the company?
See, there are two aspects in that. As far as Board of Directors, it is appointed by Government of India in the selection process by Public Enterprises Selection Board.
Right.
Yeah, there were a few shortfalls. We are supposed to have 6 directors and 1 CMD. We are 4 now, as of now. As far as other KMP, they are all within board's power, and there is no vacancy. Other senior management position as far as Bharat Electronics is concerned. If you see our succession planning, we are very strong, let's say top level management, where all our senior officers, they have worked in Bharat Electronics for more than 32, 34, 35 years.
Right.
So whoever is holding the position of director or whoever is likely to come, whether it is a short period or long period, he comes with a wide and long range of experience, and there is always a continuity. So even if you see that there has been some changes in top in last 2 years, there has been no impact on the performance or operations of the company. So you need not worry about that KMP in Bell.
Okay, great, sir, great. Got that. Thanks for the answer. Thanks.
Thank you. The next question is from the line of Dipesh Agarwal from UTI AMC. Please go ahead.
Yeah, good morning, sir. So my first question is, so if we see your order book in last 4 years, it has remained flattish at around 50,000 crores, whereas revenue base has gone up. So now going ahead, what gives us confidence of achieving a double-digit growth for next year and FY25?
Am I audible?
Yes, sir.
Yes, sir.
See, there are two aspects. Since we are targeting double-digit growth, one is that growth in defense market, and another is our diversification, our expansion in other areas, civilian market as well as exports. So we are working in all three aspects. We are leveraging our knowledge and expertise in defense field to further enhance and diversify in civilian field. So I will mention few important things. We have tied up with the Airport Authority of India for development of air traffic management system and airport surveillance radar and related equipment for civilian applications. We have already signed an MOU. And one system we have already installed at Bhubaneswar Airport for testing and evaluation. So we are on the way. Similarly, we have signed an MOU with Delhi Metro for indigenizing that imported equipments which are used in metro business. So there are many other businesses where we are working. Cyber security field we are working, whether as a business module we can supply that cyber security and networking solution to various service providers. We have already worked on perimeter security system for defense applications, like Air Force perimeter security system. All IEF airports we have done. All naval airport we are doing. Then ONGC we have done one part for their inland assets, that security system. Now we got the order for their offshore assets. Now we are diversifying it to many other areas. So apart from that, we are leveraging whatever export in friendly countries we can do. Recently, you see that President of Egypt was there. We are working with Egyptian government, Malaysian government. Under offset agreements are used so that Thales has, we have got an order. In C295 programs, we have got good order from Airbus for supplying that missile approach warning system and related items. So these are the areas where we are expanding. So we are totally in line with achieving double-digit growth.
Sir, can you quantify the revenue growth expectation for 24 and 25?
See, this year we have given a guidance of 15% plus. And definitely next 2 years, definitely it will be much better than 15% plus. Our target is somewhere closer to 20%. We'll see, we'll give you exact figure once we get the results of this financial year.
Sure. And sir, can you highlight the key orders expected in fourth quarter and next year?
This quarter anyway, we have shown the key orders. But many orders we are working on electronic warfare systems. Many shipyard orders are there which will come, that electronic equipment which goes on ships that will come, whether it is a sonar system, communication system, fire control system. Then electronic warfare on ground equipments it will come. Then submarine related activity we are doing. So it's not proper for me to name a specific program in common forum, but these are the broad area where we are working.
Sir, related question. Next year, do you expect one regiment of QRSAM will come or two regiments? Because one regiment would itself be a 12,000 crore, right?
Yeah. So let us see, because trials are all completed, and it depends upon the budget of the defense forces, whether they target one or two regiments, defense allocation, and also we'll see. Our expectation is based on the budget availability of defense forces and how they progress.
Okay. Sir, last question from my side. So last year you got a large order from Hyperion Global, and it was supposed to be a long-term relationship. There was supposed to be a large follow-on orders. Any status on this?
I think there is IoT. I think there is some issue in that. So it's not progressing well. So we can say that it is probably on hold.
Okay. Sure. Thank you, sir.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good morning, everyone. Thanks for taking my question, sir. I have a couple of questions. The first one is on essentially if you could quantify some of the order booking that we expect in the rest of FY23, because last time we indicated that we will get Him Shakti program around 3,300 crore, Atulya medium power radar. So where we are on these, also if you can mention the status of Akash Prime, which is around 3,000 to 4,000 crores, that would be helpful.
See, Him Shakti CNC is already over a month back and it is under process, so it should come. Arudra radar CNC is already over. As far as Akash Prime is concerned, it is a BDL order and it is there with CCS. The moment CCS concludes, we are ready with negotiating with BDL. So these are whatever you are mentioning links you to FCS CNC is complete. EW suit for ME-17 upgrade CNC is complete. So that's what I was mentioning, that most of the orders, big orders where we were discussing, where they have already crossed over the CNC stage, and it's only government to process internal process and approval.
Okay. The second question is essentially on the gross margin. This quarter we saw that gross margin came down a bit. Also, EBITDA margins came down. So other expenses, of course, went up. So what were the key reasons for the same, and what kind of, whether we expect gross margin to revert back to the Q1 level, let us say, in next quarter? Just wanted some insights on that.
Actually, if you see for the 9 months period, April to December last year and current year, the gross margins are remaining around the same level. It has not come down. If you compare the April to December period, so we expect the gross margins to be around the same level in the year end.
Okay, so you expect things to normalize essentially in Q4?
Yeah. No, the gross margins will be around the same level. That is, no, whatever 9 months ended, we have shown that 40% around gross margins. It should be around the same levels by the year end.
Okay. All right. Great. Thanks, sir, and all the best.
Okay.
Thank you. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah, thank you for the opportunity, team. My first question is on the services. Can you share inputs in terms of how has been the growth of services in third quarter and for the 9 months? And given that more AMC contracts are coming now from Air Force and probably even possible from Army, what is the kind of growth that we're expecting for this line of revenue?
Which one? Can you repeat?
Can you just repeat? It was not clearly audible. Can you just repeat it?
So just wanted to understand what is the share of service revenues in during the 9 month period?
10%, around 10%. Out of 11,000, around 1,000 crores is service revenue.
Okay. And do we expect, are we expecting a slightly better growth in this revenue stream with more AMC contracts on books, or it should be broadly in this range only?
Current year, it will be broadly in this range only. 90-10 ratio will be there for the current year.
Okay. Sure. So secondly, if I come back to gross margins, now since you're sharing that we expect the RM to sales to be broadly flattish, just like 9 months for the full year, I want to understand when we see incremental revenues coming in from Akash, where we have almost 90% plus localization, and even on LR-SAM further execution localization towards the end of the year and next will be much higher. So any reason why you're not expecting an improvement in this ratio and expecting only flattish? Are there any cost overruns in certain projects due to which margins are not expected to improve in the fourth quarter or for the full year?
See, in the current year, there are so many different projects we are doing, whether it is Akash, LR-SAM, and there are many other projects done by so many different units of the company. So considering all the mixture of all this total composition, we expect the gross margins to be around 40% range only.
Okay. Sure.
Because it's a mix of products. LR-SAM and Akash are two of these. But the total turnover put together, we are expecting around 17,000 plus. These two constitute maybe around 4,000 plus. So overall, the gross margins should be around the same level.
Got it. Then if we look in terms of today, the order backlog is close to now 50,000 crores plus. Can you share how is the broad mix of this order flow, order backlog in terms of defense and civilian? And within defense, for radars, communication system, can we have a broad breakdown of the order backlog?
It's around 80% if you see that defense and around 20% civil market. And it's a mix of, if you see that we are very a broad spectrum. If you see that technology and equipments are concerned, we are 24 strategic units and working on various product ranges. So, except a few which is very clearly visible, all others are very, very wide range. So, if you want to name a few for bigger, then apart from LRSAM and Akash missile system, there is a avionics package for LCA Mark II or advanced avionics warfare suite for fighter aircraft, some FNET programs, software-defined radios. Then fire control system for various ships, sonar systems for various ships. Some whatever remaining is integrated air command control system, anti-submarine warfare systems. So it's a very, very broad variety. So not one project or program which is constituting that total hour of 50,000. It's very, very broad mix.
Sure. If we look at EVM and the VVPAT projects, how is the progress on their execution, and are we expecting an add-on order in the fourth quarter early next year?
Add-on order, one add-on order we received yesterday, apart from what we had earlier, for some M2, M3 VVPATs, it's around 140 crores. And then whatever we have ordered as of now, we will be executing it by August next financial year for EVMs, both CUBU and VVPAT. Over and above, based on the new voters getting added in the voter list and all these things, ECI, they keep on planning and giving the order. So major orders which are as of now planned for 2024 elections, they have already placed the order on BEL and ECIL. Remaining that inflow continues every year, some quantities, so that will continue to see. There are so many state polls are there, so state governments, they need EVMs. Government also will need EVM future on, because some of the old EVMs, they get destroyed or destructed when they outlive their life. So this is a continuous process.
So including the 150 crore order which we received yesterday, total value to interrupt.
Ma'am, I'm sorry to interrupt. I would request you to please rejoin the queue.
If you see the total EVMs,
it is EVM and VPAT put together, the order 1,200. 1,400 crores. 1,300 is existing, another 150 what we received yesterday is
around 1,400 crores, yeah.
Sure. Thank you and all the best, sir. Thank you.
Thank you. Then ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Sandeep Tulsiyan from JM Financial. Please go ahead.
Yeah, very good morning, gentlemen. The first question is on the Triton electric vehicle order that we were supposed to get. There were some pilot batches that we were expected to supply in the December quarter, based on which there were negotiations that were supposed to happen for a larger order over there. If you could update us on the status of that, as well as what is the expected size of the order that you are likely to get, some timelines on that would help.
See, that was one indication, but first systems we are still to give, so maybe in just 1 or 2 months we'll give. But it will take time, so we have not factored what Trident, the projections was there in our revenue stream as of now. Let us see how it moves ahead, how Trident itself move ahead in their business and how it is going to be linked with us. So as of now, that is going a bit slow.
Understood. And second question, again, just iterating on the order inflow part. So we used to share some sense on the larger orders, if not all, given the tentative size what they have. You've given indication that Himshakti and Arudra are near finalization, which would not contribute more than 5,500 crores given by the numbers you've shared. But you're guiding for somewhere close to almost 15,000 crore kind of inflows in the fourth quarter of FY23. So if you could also share which are the other large orders besides Himshakti and Arudra to constitute this.
Himshakti, Arudra, I told that air defense control and reporting system, then links U2 fire control system, which is around 1,600. EW suit for MI-17 upgrade around 800 crore. And there are many orders when we say that in the range of 200, 300 crore. I read it will go up to 3,000 crores. So all three services. So they are under various stages. We reiterate what is told in the beginning. Around 10 to 12,000 crores PNCs are already finalized and contracts are going to come before March most likely. And some more quotes have also been submitted. So with that only we are retaining our guidance closer to 20,000.
All right, I'll leave it at that. And last question from my side is...
Sir, sorry to interrupt, sir. I would request you to rejoin the queue, please.
Yeah, sure.
As there are many other participants who are waiting for their turn. Thank you. Thank you, sir. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. My question is regarding the civil part of the business. Where do you see 5 years from now? It is contributing, you said, around 20% now. And what are the margins for that business as compared to defense?
We feel the ratio of defense to civil in the next 4 or 5 years will continue to be in the range of 75-25 or 80-20 like that. Defense will be always in the main this one, and 20 to 25 maximum will be civil, not more than that in the coming 4 or 5 years. And as far as margins are concerned, basically we don't give segment-wise information as we are exempted from the same. So we would like to refrain from that. For defense and civil separately, we would not like to tell those because we are exempted from the segment-wise.
And so lastly, you have inked many MOUs at the Defense Expo. So any progress on those MOUs?
See, these are MOUs are for long-term progress. So we are working on those. These are all basically development-related, business development, product development, technology development, future things. So last Defense Expo, it's only 4 or 5 months left. So these are all have a long-term impact.
Okay, sir. Thank you.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, good morning. Am I audible?
Sir, your audio is low. I would request you to increase the volume a little bit, sir.
Okay, is this better? Can you hear me now?
Yes, sure.
Yes.
Yeah. Sir, the first question is on the future margins. You indicated sales growth could be in the corridor of 15 to 20% with, possible bias towards 20. Would we be in a position to maintain our current margin profile going ahead as well, despite of, any mix change in sales?
Yes, we will be able to maintain these margins, whatever we are stating now.
Okay. Any room for headroom to further increase them with, with some sort of cost efficiencies or increased localization, or that you feel that is a tall order?
No, our guidance will remain in the same range, what we are giving now. So we will not tell that we will be increasing our margins just now as it is, but guidance remains in the same range as it is as of now.
And sir, last one, the Swati radar which was sold to the Armenian armed forces, there is news that there was some leakage on specific details and specifications by some Armenian army personnel for that specific radar. Would that therefore make the government a little more sort of reluctant and cagey in trying to build export base because these are strategic assets. While export potential is there, these sort of events might be difficult to digest for the armed forces in India.
So I'm not aware what type of leakage you are referring to.
Sir, there are media articles that the radar the specifications for the Swati weapon locating radar, which was sold to the Armenian armed forces, some army person in the armed forces of Armenia leaked out the specification details, and he has been arrested by the Armenian government under the Revelation of State Secrets Act and so on. But in any case, that means that some data or critical data pertaining to the radar's performance would have been leaked out, in which case,
See, one thing is that the specification of radar, these type of radar like weapon locating radar, these are all broader specifications are already in public domain. You go and see James Defense Journal and all. They give the broad specification of all types of military equipment. If some specific detail is leaked out, I don't think it will have any impact on that, because the technology behind the radar which is more important. And what is that software, how you have addressed that, what is that here. That I don't think anybody will be able to give, or that information we provide to anybody. See, design parameters or design details based on which this radar is manufactured, it is never shared to anybody outside. So even Armenia, they will not have design parameters or design detail of this radar. They will have only operating detail. And anyway, broad operating detail across the world, it is available for all type of radar on public domain.
Okay, fine. Thank you, sir. And on the missile programs, MRSAM and QRSAM are the big ones that are in the pipeline. There is also, I think, a very short-range air defense Vishwarad program, which is in the works, plus man-portable ATGMs and so on. So, what is the scope for Bharat Electronics in Vishwarad and MP ATGM, if at all any, and what is the timeline for MRSAM and LRSAM? MRSAM and QRSAM?
See, MRSAM and QRSAM definitely government is working on, and maybe next year or next to next year, because these are all big programs, so they take time for induction. So, and anyway, in these programs, wherever electronics portion is there, Dell is already there in that.
And the other two programs, there is no involvement for BEL?
Which program?
Very short-range air defense systems and for the man-portable ATGMs.
I will check. As of now, I don't have details.
Okay. Thank you, sir. I'll get back in the queue.
Thank you. The next question is from the line of Abhijit Mitra from Ioneers Alpha Investment Management. Please go ahead.
Yeah, thanks for taking my question. Just to understand, your thoughts as to, the reasons why the other equipment budget of the Air Force was not utilized this year. I mean, what are the drivers that led to this, unutilization of the budgets that were allocated to them, and whether this had any bearing on BEL's?
So, Air Force has not utilized. It has got a broad area. BEL is one part of that. So they have to answer that, because a lot of big ticket procurement also they have. So where they have used, where they have not used. But as far as our supplies are concerned, we are on track, and wherever payment is due, they are paying. So.
Right, and YOY, barring Air Force, there is no other growth areas that we see within the other equipment domains, be it for Army or be it for Navy. So,
see, we are very closely working with Navy, and we are there in all naval programs. If you see any new ship or submarine or various type of this, they are getting inducted, whether it is a cadet training ship or whether it is a offshore patrol vessel, whether it is a new generation missile vessels. Our new generation corvettes, whatever is coming, almost 20 to 25% of weapon and sensor is from BEL. See, naval ships, you have to take care that these are all small numbers. So each equipment may not be a big, but if you add around 10 to 12 equipment in a ship where BL equipments are there, be it if you see any frigates, if you see it's a communication system, sonar system, fire control system, torpedo defense system, then radar system on there. All these things add together, it's 8 to 900 crores equipment in a ship, which is there. And if you add to that SAM system, if they go for either LR SAM or something, so it adds further. So BL is very closely associated with the naval program, and Navy also is a major chunk in our business. So you cannot say that only Air Force.
No. What I'm trying to understand is that there is no growth in the other equipment budget, be it for Army or be it for Navy. The only growth is coming through Air Force. So the other question which I was trying to understand is whether QRSAM has been allocated within the other equipment budget for FY23.
That Air Force has to tell. We are not aware. Government has allocated. Now Air Force has to prioritize what equipment as per their strategic priority they would like to take.
Okay, got it. That's all from my side. Thanks.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Yeah, hi sir. Thank you. So I have two specific questions. First on CAPEX. So I think last year we incurred around 5 to 6 billion plus on expanding LRSAM and Akash facilities. So how do we see that, maybe in this and next year, where will that go? And that's my first question, sir.
So the capex is expected to be around 600 crores in the current year. 600.
And as far as building facility in capex is concerned, we are very aggressive. And if you see, we are building quite few that infrastructure of factories, new factories, to take care of our growth. One of them we are building an advanced night vision factory at Nimaluru. It is 15 kilometers from Machilipatnam, where we are spending close to around 340 crores. It will be a state-of-art night vision equipment factory. Then we are establishing a D29 manufacturing facility in Bangalore. Then we are establishing electronic warfare for ground-based equipment in Ibrahimpatnam in Hyderabad. Then Anantapur, where we were having that defense system integration complex, there also we have started the work. We have taken land in Nagpur to expand into arms and ammunition around 200 acres of land. Then super component test facility we are building in Hyderabad with investment of around 100 crores. So quite lot investment we are doing, which will come in next 2 to 3 years, which will be start giving results. In fact, Nimaluru factory will start working from next year, May, June. It will come in stream. So what the Director of Finance was telling, that around 600 crore this year, and in the same range, 600 to 800 crore every year, we will be spending in capex to build our infrastructure to take care of growth.
Very helpful, sir. And second and last question is, what is the share of nomination, contracts in our revenues this year, and how will this change in the next maybe 2 years? Very broadly, you can mention us, and the share of outsourcing to private sector that we did this year versus last year. Thank you.
Nomination basis, the share remains around 75 to 80%. 75 to 80% of our revenues, what we are doing in the current year, is on nomination basis.
Sure. And the share of outsourcing to private sector this year in revenue vis-a-vis last year? That's it. Thank you.
Share of outsourcing to private sector?
Yes, sir. The procurement. FY22, it was around 31% of the domestic procurement that we do through largely private sector. How has it changed this year?
It is almost around the same level.
Okay. Thank you, sir, and good luck.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star 1 on their touchtone phone. We have the next question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Good morning, everyone, and thanks for the opportunity. The first question was that I had was on, I think there was a question recently, just last speaker asked on the nomination-based share of a backlog, which is 75 to 80%. Wanted to get a sense of how much of this share is coming under the new pricing regime, and just want to get some sense, because I understand LRSAM is there, but it will be good to know how much of the 75-80% is coming from the new pricing regime.
There is no new pricing regime.
No one, whatever orders we get will be under the pricing regime what is prevalent as of date, last 3-4 years.
Sure. So,
nomination basis, whatever government has promulgated the guidelines, no one orders will be falling within that with that guideline only. But it is at the same time, as we have told earlier and we repeated, the cost efficiencies built in lead to these margins.
Understood. So one should assume that the new pricing regime would have no impact on margins incrementally.
Yeah, this has come now around 3 to 4 years back, and our 3-4 years performance is there in front of you, so you can just gauge based by that.
Understood. So the second question that I had was on your existing backlog, which is 50,000 crores. Could you give us a sense of how much execution can happen in FY24?
So we have, as we started in the beginning, current year we are given a guidance of 15% growth, and the next year our guidance remains again around 15 to 20% growth. So this is a broad range you can give. Maybe we can give you a more precise guideline once the results of the current year are out.
Okay, so am I to assume that most part of FY24 execution can happen from the current backlog itself without new orders coming out meaningfully?
Yes. Current order backlog itself will, the revenues what we are forecasting is based on the current orders backlog, and of course these 2, 3 or 4, 5 major orders what we are expecting before March also.
Sure. Just a last question from my side. It's been interesting to see the company kind of announce several MOUs over, let's say, September to October to November, last 3 months. Could you give us a sense of how to kind of think through the business opportunity, or how to think about financials of this company in context of these new endeavors that the company has gone inside? Maybe top 3 MOUs according to you would be useful.
If you see that broader MOU in different technology, noteworthy is our MOU with the Delhi Metro, where we are working to indigenize that whatever systems they are imported in current, there is a opportunity for expansion of metro. Similarly, our MOU with Airport Authority of India, where we are working on indigenizing that air traffic management system and all related services and radar system for this. There are expansion programs, and there are many other MOUs if you see list, including that Munition India Limited, where we will be working with the arms and ammunition. Then Yantra India Limited, where we will be working their product range. So you see, what I want to say that every product which is there in all our parties, there is a certain element of electronics involved, certain elements of software involved, certain elements of AI related things are involved, where we have expertise. So when we complement with others this expertise, then it is a better value proposition and it will give growth in business. Now, how we complemented even in Delhi Metro or AI is their domain knowledge. Added with our expertise in the software solution and our expertise in radar system and electronic system, added together, it will give complement and give value. Same time, many companies at broader level where we collaborate and sign MOU for business development, and we also sign MOU at a sub-module or technology level, where there is a complementary strength. That is mostly like IITs or IISc, or some startups who has got niche technology in their domain, where we can tie that and leverage their knowledge to build it in our main products and offering. So we are leveraging both ways. MOU at bigger companies where we complement their strength, and MOU at a startup level, or academic institutions, or research labs, where we leverage their technology or their expertise in building our solution and offering.
Great, sir, and all the very best over here. Thank you, sir. Those are my questions.
Thank you. Before we take the next question, a reminder to all the participants, you may press star 1 to ask a question. We have the next question from the line of Prabir from Ratnabali. Please go ahead.
Thank you for the opportunity, sir. Sir, I have a couple of questions. First, I would like to know, as you said that non-defense is rightly contributing around 20%. So in your non-defense has several fields like from cyber security to semiconductors to anything. So are these margin? What is the gross margin for these on overall, so that we can understand that as you said that going forward it will be 75-25, so we can understand whether it's margin accretive or margin dilutive.
So as we were mentioning earlier, in non-defense also there are so many different segments where we are operating there. And it could be homeland security, it could be EMVPAT, it is healthcare segment, it is for metro solutions. So each one has got different margins. What guidance we are giving is for the overall margins for the revenue, what we are predicting. So we stand by the guidance what we have given. So individual margins will be different and it will be varying. So we cannot tell that it will be this much in metro, this much in homeland security. That we would not like to talk on that.
Okay. So my next question is related to your projects called HPR, High Power Radar. So you are developing the system. So what is the status of this HPR as well as the Uttam radar?
The HPR radar, the technical evaluation happened and we fielded with LRD, but I think HPR with Delta now MOD is considering. So that is not there as of now, HPR. Uttam, I will come back. I have not gone through that.
Sir, I could not understand about Uttam
status. I have just not checked up, so I will not be able to answer you as of now. As far as HPR radar is concerned, our competitor, their radar has been, as we understand, it has been selected and MOD is processing it.
Okay, sir. Thank you. Thank you for this.
Thank you. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, good morning, sir. And my question is, our employee cost is actually, employee benefit expense has gone up by 70 crores. Is it some addition or some more items? And will it be increasing in this fashion?
No, employee benefit expenditure has gone up due to reasons like the DMS allowance increase and recruitment of some contract external labor and actuarial valuations. So it is only normal increases only.
Okay, and sir, in one of the last con calls, we had mentioned about the US order and we are pretty optimistic about it. How is it going now?
US order, which one you are talking of? Which particular one you are talking of?
There was one US order from US company which could go, if the trial order was to be done, then the size of the order could actually go exponentially.
It is going slow. We have not factored in our projections.
Okay, so is any scope of increase there?
As of now, we are working on only first system, and so we are not very sure. That's why we have not factored this value in any of our projections and guidance.
Okay, sir. Okay, that's it from my side, and all the best to you, sir.
Thank you. A reminder to all the participants, kindly limit your questions to 2 per participant. Thank you. The next question is from the line of Abhineet Anand from NK Global Financial Services. Please go ahead.
Yeah, thanks for the opportunity. I just want to know a slightly medium-term view. We are at this year will probably hit 17,000 crores on sales on a 15% guidance. The next year, you have indicated around 15 to 20%. So we'll meet that 20,000 crore, which is our current inflow run rate. and probably 24 is also similar guidance. I just want to know beyond 24, in next 2-3 years, say 25 to 27 odd, what type of annual inflow are you currently envisaging? I know it's difficult, but if you can give some subjectivity to that, it will be very helpful for us. Thank you.
See, we are working on many technology and many programs for different services and others. And the way services projections, long-term projections are there, we envisage that same 15 to 20% growth in long term.
See, it is our programs will be linked to the defense budget, and defense budget will be, definitely on an increasing trend only, as we can foresee that from last year it was 1.52 lakh crore, it has been increased to 1.62 lakh crore. So consequently, as the budget increases, our share, minimum share will remain, and with the share growth, programs we are doing, whatever technology programs we are doing, maybe a improvement also could be there.
And one of other aspects, like what earlier questions was asked about service business. So more things are going on defense. Our share of service business also will increase in the term of supporting these equipments which are installed in defense services, in the form of supplying the various types of spares, test equipment, then repair support, some of the critical area where services will place AMC. So more and more systems are going that and physical terms and absolute terms, revenue operations also will give us growth. Because these are the equipment which we are supplying, they have to be maintained for another 15 years by defense forces.
So just to clarify, you indicated 15-20% growth on the inflow side on an annual basis can be seen beyond 24, right?
Yes.
And on the spare side, while it's, on the services side, while it is at 10% now, say in next 3-5 years, where can that grow?
It can go around 10 because base will be increasing. You have to understand that absolute terms it will grow, but base also will grow. So 10 to 12% that will remain, but on a wider base, bigger base.
Thank you, sir. Those are my questions. Thanks a lot.
Thank you. The next question is from the line of Khadija Mantri from Sharekhan. Please go ahead.
Hello.
Yes, ma'am. Please proceed.
Yes, sir. I would like to know how much is the exports order book currently?
Export order book is around 2,000 crores as of now.
Okay, sir. And what are our expectations for the next couple of years in terms of exports?
So we are working with many countries, but normally if you see that exports is more towards G2G also, because the guidelines of Government of India, where there are strategic interest and what guidance are there and where we can put it our services. So we are working with, like question was there, we have supplied something to Armenia. Then Mauritius, we are working on some projects. Malaysia, we had discussion. Then Egypt, President of Egypt was there for some of the products. So we are working very aggressively on export front also. But normally what happens is, if you see BEL's products, mostly our products are of defensive nature, surveillance type of equipment, communication type of equipment. So it takes time. It does not become absolute necessary for any defense person to have it immediately, because these are all defensive applications. You have, you don't have, you can continue with that. So we are working with the government also, Government of India also, for pushing export. We have opened the offices also. Our business delegations are going with Government of India delegations to make sure that our export this increases.
Okay, sir. Thank you for the explanation.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Harshit Kapadia for closing comments. Over to you, Mr. Kapadia.
Thank you, Michelle. We would like to thank Shri Bhanu Prakash Srivastava, Chairman and Managing Director, Shri Damodar Patel, Director Finance and CFO, and Shri Srinivas Company Secretary, for giving us an opportunity to host this call. We would also like to thank all investors and analysts for joining for this call. Any closing remarks you want to highlight to investors, sir?
No, thank you very much for coming together and having a broad idea. I can only say that BL is a technology-driven company, and we are very few company in the country where we invest heavily on research and development. If you see our results, 7% plus of our turnover we spend on R&D. We have a very strong R&D base, and that's how we are able to maintain our growth and profitability and all these things because of our strong R&D base. Close to 2,700 engineers and scientists are working in R&D with us. So that's the key strength of Bharat Electronics, and that's how we are able to sustain and grow. So thank you very much for having confidence in Bharat Electronics and coming together for having an interaction. Thank you.
Thank you, all.
Thank you, sir. On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.